Hey, what's up guys? This is Ezekiel here. So every trader's goal is to be able to buy at the low and sell at the high. But how exactly do you do it? Let me give you an answer. Pullback trading. So in this video, I'm going to show you a proven pullback trading strategy that helps you to enter trades at the perfect moment right before it shoots up or shoots down. Alright, so this allows you to buy literally at the low and then sell at the high. Right, so let's talk about a trading plan. Right, so this trading plan is a pullback strategy that combines with various market structure factors. So with an advanced candlestick pattern as the entry trigger. Alright, so this strategy is versatile, right? And it works across any time frame. But if you want to say, hey Ezekiel, what is your preferred time frame? Right, you can use the 1 hour time frame for this case, or the 4 hours. So this applies to any markets, whether you are trading, say, Forex, stocks, or crypto, right? So the pullback strategy focuses on what? Trend continuation using two trading models, right? So each model incorporates an advanced candlestick pattern, right, that are similar in appearance, but the psychological context behind them differs slightly. So this will give you a distinct insight into price action on how they behave. So this trading strategy that I'm going to share with you is designed to capture impulsive move. Impulsive move means like boom, big moves, especially during highly volatile trending markets. Alright, so now, this strategy consists of 3 major steps in both of the trading models. Alright, so identifying the market direction, waiting for a pullback, and then finding an entry reason. So now let's start off with first step, identifying the market direction. So in this step of the pullback trading strategy, right, we focus on identifying the market direction by aligning our trades with the controlling side of the market. So to achieve this, we use the 50-period exponential moving average, the EMA, 50 EMA. Right, so once the 50 EMA is applied to the chart, we wait for price to break either above or below the EMA and create a new high or low depending on the direction. So this confirms whether we are in a bullish or bearish market. So if the price breaks above the 50 EMA and forms a new high, this indicates a bullish market, right? Which signals potential buying long-term opportunities. So on the other hand, if price breaks below the 50 EMA, creates a new low, it signals a bearish market. And this prompts you to look for opportunities to go short. Now that you have identified the market direction, we can focus on the risk to reward ratio. This will ensure potential big rewards, right, that outweighs the risk. And that's the truth for every trader. So with this now being established, we move to the second step of the strategy, which is waiting for the pullback. Alright, so the pullback provides an optimal entry point within the ongoing trend. This allows you to have obviously better risk to reward ratio and allows you to enter the trade when the market momentum is in our favor. Right, so to identify a valid pullback in this trading setup, we use a pretty straightforward method. We look for price to print at least 2 opposite colored candles following an impulse move. This pattern indicates a temporary correction phase and signals that the pullback may be occurring. These opposite colored candles suggest a shift in momentum. and it provides you with a clearer entry point to execute the trade with the overall market direction, right? The same concept is applied in a bearish scenario as well. So now, to confirm a valid pullback, we require at least 2 green candles following the initial impulse. So this ensures that the pullback is substantial, and then it provides you with a better entry point, obviously for a better profit, right? So now, the third step is making the entry. So now, we need to establish the entry reasons and exit strategy. This includes what? Defining when to enter the trade based on specific signals or patterns, when to exit if the trade goes into your favor or against us, right? So this allows you to secure profits or at least limit your losses. All this completes the strategy, making it everything in a precise and obviously effective way, right? So now we use 2 candlestick patterns as our entry to predict the end of pullback and the start of an impulsive move, right? So now, the reversal candlestick formation we are discussing are advanced engulfing candlestick patterns. This engulfing candlestick formation is a real, highly effective price action reversal pattern. The pattern features 2 candlesticks. The body of the second candlestick has the opposite color compared to the first. The second candlestick body engulfs, means wraps up the body of the first candlestick. So now, for it to serve as an entry reason in our pullback strategy, the engulfing candle must adhere to the specific rules that we are going to establish, right? So these criteria ensure that the pattern is valid and then obviously enhance the reliability of it as a trading signal. Okay, so in the first entry pattern of this pullback strategy, number 1, the green candle body must be larger than the red candle. Number 2, there must be color change, right? Number 3, the green candle should form a lower low compared to the previous candle, indicating it is a swing low. So now, when these conditions are met, this would constitute as our entry point, right? So we open the trade at the close of the green candle. Set your stop loss just below it, right? Which represents the latest swing low, right? So now, I'm going to give you the second entry pattern, right? Although similar, number 1, the green candle still has a body with the opposite color closing above the previous red candle. Number 2, the green candle is not a swing low. However, this pattern can also be used as an entry reason if the red candle has created a lower low than the previous candle. Alright? So this confirms that the second engulfing pattern is also indicative of a swing low. Okay? So these are the 2 entry patterns. Now, on the other hand, in the bearish scenario, the same principle applies. Okay? So the first entry signal, after a bearish impulsive move, wait for the pullback. Now, look for an engulfing red candle with a color change and a larger body that forms a swing high. So now, enter at the close of this candle, place your stop loss above the swing high, right? Straightforward, right? So this is entry pattern number 1. Entry pattern number 2. After the initial impulse and correction, the market should print a red engulfing candle. So now, ensure that the green candle, in this case, has created a new lower high. So this confirms the setup and allows for the entry at the close of the red candle with the stop loss placed above, not the red high, the green high, above the new swing high. Okay? Cool? Right, so these are the 2 valid entry reasons for the pullback strategy. Any other patterns or conditions that is not covered here do not qualify for a valid entry. So now, let's now put things together for some chart examples. Now, we have here a bullish market on the 1-hour chart. Price is trading above the 50 EMA, and we have 2 candlestick pullback. So all we got to do is to wait for the market to print our candlestick entry patterns for us to enter a long position. Now, here, we have the valid entry reason for a trade. So now, we open a buy position and then we place our stop loss below the low of the engulfing pattern. And then for our take profit, right, we will aim for at least 1:2 risk to reward ratio or more, or at the next rejection level, right? So now, the bullish engulfing candle signals a bullish reversal, indicating a rise in buying pressure, especially when it appears at the bottom of a pullback. So now, when combined with good, favorable market conditions, right, this approach gives you a highly accurate entry strategy. The same goes for a bearish scenario. We want to see that price is now trading above or below the 50 EMA. Below, right, for a bearish market. Then we wait for price to print 2 bearish candles and take it as our pullback movement. So now, in the first trading model, we wait for price to form the advanced engulfing candlestick pattern before entering a short position. Our stop loss is set at a swing high, right? Okay, and then our take profit is at least a risk to reward ratio of 1:2, or at the previous low, or at the next rejection level, or even trailing. To keep it straightforward, set it at the next rejection level. So now, this allows you to enter right smack at the spot, at the optimal spot, coming out from a breakout potentially in a trending market, and potentially heading a whole lot more. So now, let's talk about the second setup. This trading setup mirrors the first model with 2 key qualifications. So number 1, market condition, right? You ensure that the market is trading above the 50 EMA and has created a new high in a bullish market. Number 2, pullback. Wait for a 2 candlestick pullback that must touch the 50 EMA. Pullback should retrace all the way down to the 50 EMA and be at least 2 candles long. It's not like one big bar and then touch. It needs to go all the way down and at least 2 candles long. So now, trade rejection confirmation. Look for price rejection from the 50 EMA. Rejection can be indicated by a wick or a single candle closing below the EMA before going back up. If price does not immediately return to the range, then this trade is invalid. Because sometimes price can go and then after keep going lower. It got to return pretty much immediately back up to above the 50 EMA for it to be a valid rejection of the 50 EMA as a pullback. So now, once these conditions are met, that's where you can enter the trade using the previous discussed engulfing candlestick pattern. So now, if you see, these are all very specific rules. And if you stick to the rules and you stick to the trading plan, right, then this ensures that your trading approach is rule-based and your objective towards it, right? So the simplicity in your strategy is essential for consistency, consistent profitability. There has to be a very clear-cut rule base. So this is just one more important concept to understand, all right? I'm going to give you one more before placing a trade with this strategy. The trading strategy is a trend continuation setup. We must be aware of what? Reversal signals that the market provides. So keep in mind the 2 types of market factors: the higher time frame key levels and reversal chart patterns. So now, before placing any trade, it's important to check the distance to the key higher time frame levels. A minor rejection at these higher time frame levels can signal major trend change in a lower time frame. So only enter the market if there is sufficient space before reaching the next key level, right? So this approach helps you to avoid losing trades, right? Because you're only looking at one time frame. Get it? So therefore, combining multiple time frames gives you a more comprehensive and informed chart analysis, a bigger perspective, right? This will increase your accuracy in your overall trading decision. Now, the second market factor are reversal patterns. So reversal patterns are like key chart formations, right? That indicate potential change in the current trend. So for example, during an uptrend, A reversal pattern can be what? A double top. It could be a head and shoulders. It could be, say, a triangle formation, and so much more. This tells you that the buyers are kind of like losing momentum and the sellers might be gaining control. So when these patterns appear, you want to approach continuation setups with caution. Here's the key thing. You don't want to go and watch a YouTube video, whether is it my video, whether is it other video, learn that strategy, straight away go to the live market and start trading live. And then come back saying that, this doesn't work, that kind of thing. It's not like that. Backtesting is important because different pairs, different time frames, respect in different way. You could have a pair that this strategy works fantastic on. And then you could have a pair that this strategy rarely even appears. So therefore, you want to run the backtest, run the criteria into it, let it run out with probability, and that's where you can see the strategy thought here works with this pair. I run through the backtest once, backtest twice, I ran through year 1, year 2, and then when you're confident with all the criteria set, and then now it's in the back of your mind because you already run through all the simulation already. The next time when you see a live chart on the same pair, on the same time frame as your backtest, you can now approach this with confidence. So now, let's sum it up. Pullback trading plan, right? The overall plan. So this combines market structure analysis and advanced chart candlestick pattern to trade pullback. Time frames, you can try on 1 hour, you can do on a 4 hour as well. It works on any time frame. Those two are my preferred time frames. Now, combine the trend direction using the 50 EMA with the engulfing candlestick patterns that I just showed you to identify high probability entries after a pullback. So now, the candlestick entry. When the larger candle engulfs the previous one, signaling a potential trend reversal, this is used as precise entry point. So we showed you two, right? We showed you 2 entry points. Analyze the market structure. Check the higher time frame levels. Is there room for it to go? Check the reversal patterns. Are there any reversal patterns at higher time frame, for example, like double tops, so that you can avoid bad trades? All right, then back test. Cool? So thank you so much for watching. If you enjoyed this video, please give it a thumbs up, right? It really helps to keep the channel growing. And if you are new here, don't forget to hit that subscribe button and turn on the notification bell so that you never miss an upload. So we also love to hear from you, right? Drop a comment below and let us know what you think or what you'd like to see next. I mean, your support truly means the world to us. It keeps us motivated to bring you awesome content every week. And if you're keen to learn more, I've created a free 5-part comprehensive training where I show you exactly how I trade using my lifestyle method. Link in the description below.